again, going into these events over the weekend, just reading Twitter and reading a lot of articles, overall extreme bearish sentiment, thinking, kind of world ending, next market crash kind of thoughts. And we didn't really get that. The market opened on Monday. A little gap down, it got bought back up. Yesterday, we had that little shakeout down through that key mini pivot low of 675, and the market has bought it right back up. And then today, again, we're pushing higher. So it seems we're still in this broad, 30-point range here, with 670 being support and then 700 in the SPY being resistance, just broad flag or potential topping pattern. Now, given how tight these ranges are that the market has been in, which we typically don't see very often, again, even if we go, this is a 30-point range right here. So I'm going to go back to the April lows of last year, and we're talking about a 30-point range for the last quarter. The last 3 months of trading, the market has been trading in this equivalent daily candle. So just this, when the kind of tariff war got called off, half of the intraday price action of the S&P has been the overall range of the last quarter. So extremely tight range. This is even the prior day before the news came out. This is a 30-point range. This is a daily candle of 30 points in the S&P. And this entire last quarter of trading is, basically the same range. So extremely tight ranges, where what I've been trying to explain this morning in the chat is I would rather, be very hands-off in this chop and just wait for this break. So this is, for me, again, we're still focusing on some swing trade ideas, but being very defensive, very light, because this chop is just so tight that it's easier to wait for the expansion of either to the upside or the downside when that time comes, because this tight price action cannot last forever. Again, moving on, Dow 30 names very much still in their broad breakout channel. Welcome to Big Picture Trading.